Welcome to Insights. I'm Eric. I want to do a review on the small cap stocks or the Russell 2000. Cleaned up this version of the matrix so we could focus on it, keep the content open for people to look at, but then we're going to restrict some of it for the subscribers at the end and do another follow-up video at the end. The Russell 2000 has been up for 5 months and has produced a 36% return. That's pretty aggressive. It's got a lot of interest. People are plowing into the Russell 2000. The phase within the evolution of the trade, this is blank, so that means empty is A&E phase. The A&E phase is energy and alignment. We're looking for opportunities to get in, and we want to position that against the primary trend, the price and time cycles. Zero is the norm. It tells you that price, despite the 36% rally, is pretty close to the norm still, and time is at 5 months is still well below zero. So this has a long way to go as long as the primary trend doesn't flip. So where do the problems lie? The problems lie in a weekly and daily trend, mostly on the price side. The BUS, these cycles, they're highlighted red or bolded red and stand out because they're statistically significant. That means the 30 weeks that the Russell's been up is pretty high. That's a pretty high number for the weekly reading. See them go to 3 sometimes, but not too much more. The daily at 4.8 is quite high. 5 is the extent of really volatile markets. Sometimes they go higher, but 43 days is a lot, and I wouldn't push this because of just based on this alone. I mean, you would probably looking for a reason to get out or take some profits, but I doubt people will be doing that because it's, you know, you're monkey piling on and everyone else is doing it, so why not? But this is where you have to adhere to your trading discipline. Specifically, ours is the evolution of the trade. Another thing to be concerned about is energy, and the energy build at -70 and -46 is pretty high, and we're going to take a look at that right now. In this temp tab, I've created or I pulled in the DI charts. DI, these are bearish energy builds. These are bullish energy builds above this level. These readings down here, and they were highlighted on the bear side, create another blocking down. Now, I know price is bumping up and smashing through that, but these are pretty significant builds. The DI2 is at -46. That's quite low. It can get lower at times, but the lower the DI2, the yellow reading goes, the more energy is used to oppose this rally. So there's sufficient energy to at least slow the advance, and considering that the daily is so extended, it could be enough to tip this into consolidation, at least short term. Something that may set up a reset. It could set up a longer term top. We don't know, but this energy build will certainly slow things. Wildly bullish optimism at this point is really unfounded. And what we can also look at, and subscribers know, is that you have a thing called, well, this is price, and a series called publics and pro index. This is the pro index and this is the public. Defines participation. The pros here, retail, smart money, dumb money. Smart money has been buying the low as we see a series of higher highs. That's what's supporting this rally. Public is buying it too. I mean, they can both do it. One can follow the other, but we're looking really for confirmation here. We still haven't gotten above the high that was established in 2018, so this one's not out of the woods yet. I mean, there's still a longer term negative divergence going on. If this starts to roll over, professionals start to sell without breaking above this high, it's going to create a longer term negative divergence, and that will be a warning. The reversals, which are located in this part of the tab, you can find them by sorting out by their tickers. Prices above, this is the price level, and anything above here is supply, demand, or resistance. Anything below price, the red price, is support. And these are the supply and demand zones. This gives us one look at just the weekly reversals, and you can see that when price closed above the weekly reversals here, which wasn't really even the highs, things really started to take off. We see no other reversals here yet because the computer hasn't recognized anything. So we're going to have to keep an eye on there. If there is a consolidation that materializes, it's going to come and probably fall and test some of the reversal levels. So ultimately, what we're looking at in terms of the Russell 2000, like many of the assets that are flying up the flagpole, it is a relatively young primary trend, but these daily and weekly readings, weekly is not as much, but the daily is really extended, especially on price. This is not something that you can chase. At best, you can wait for the daily trend, tertiary trend, to turn down and then to flip back up again. And that within the evolution of trade, that causes a reset. We don't necessarily buy a reset, but if it resets and then energy picks up, energy would go from here to here. That would be a bullish sign. It would be a sign that the invisible hand is accumulating. So we would be really inclined to participate in any reset, rebuild our core position, or escalate the core position. But as of right now, we really don't know. There is one other aspect. There's a couple more aspects. One thing I want to talk about here is inside the intermarket trends here, we can see the Russell 2000 has been outperforming the NASDAQ, the Dow Industrial, and the S&P 500. It's the extent of the outperformance here at 2.3. That's pretty aggressive. This is a fast move in the Russell 2000. Same with the NASDAQ at 2.7. The outperformance relative to the S&P 500. These numbers are not very stable. When you get stuff that's pushed beyond, this is what they call the reversion to the mean. The outperformance is great enough that it could trigger a consolidation. There's another problem on the longer term, but I'm going to leave that to the subscribers. So if you're looking for more information, go to my blog, read about the evolution of the trade, and you're going to have to subscribe to the matrix to find out when this thing flips, and then you'll get a reset, and then when it's even able to jump back in, or perhaps the consolidation triggers something that goes deeper or even flips the monthly trend. You determine that at the point of time, and we evaluate this every day. The matrix gets updated daily, and the energy gets updated weekly. So thanks for watching this video, and have a good trading day.